Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, November 6, 2020. It's about 2:16 p.m. as I'm starting the video, and what we're going to do in this one is take a look at various commodities, particularly the ag commodities, although I have a watch list of various commodities, and we'll touch on a couple of other commodities such as natural gas and oil if come across those in here. So all said and done, we have about a dozen and a half or so we're going to go over here. So I'll try to do this quick. We'll stick to mostly daily and maybe weekly time frames on a few. Okay, in no particular order, meaning there are some that look bullish to me right now, some that I wouldn't say look bearish, but maybe due for a pullback or at least some consolidation. If you've been with the site for a while, you'll recall back here earlier in the year, I started getting quite bullish on this, saying that the risk reward in the commodities was very attractive. Also a diversification play. Remember, commodities are a completely different asset class than equities, and no matter what goes on with the stock market or commodities don't go to zero. They don't file for bankruptcy protection. They don't have accounting fraud or anything like that. So there's that tangible value. And again, I just think it has been a good place to put money. But I do these updates for longer term, but for both active traders, swing traders, and longer term investors as far as micromanaging a position, when to add to one a core holding, or maybe take some profits, maybe reduce that position. I like to strategically manage my trades, especially long-term trades or investments. By that I mean I'm not going to add when something runs into resistance. So let's start here with cotton. Cotton, you probably can't make it out, but just underneath there is the symbol. It's BAL, is a symbol for the cotton ETF. And what you can see here is this 4290 level is one of the most significant levels on this chart. It's a pretty decent resistance level, and we just hit it. Why is it a decent resistance level? Well, you can see we had a major reaction low right there. That was when we put in this bullish falling wedge, broke out there, hit that first target. Then we broke it, and we had a sharp drop once we broke it, and then support once broken becomes resistance. So we had another reaction there, rallied into it, massive rejection off that level, and we just hit it again. So we were quite overbought. You can see here on the RSI how high it was. There's your overbought line at 70, and last time we were overbought was we had an overbought reading here, but you can see each of those overbought readings resulted in corrections, obviously some larger than others. So that near term, is that enough to work off those overbought conditions? Well, possibly. We had a pullback and a correction. All I can tell you is right now this is not one of my favorites. There is resistance. If it can take out 4290 with conviction, a solid daily close, a weekly close, all the better. And preferably, since we just hit those overbought conditions, maybe work off. I'd like to see it come back here, possibly to that 3220 or 3926 support. And maybe consolidate for a while, work off the overbought conditions, and then build up the energy for a breakout. So I remain longer term bullish on the majority of these commodities, and what we'll do is we'll flip back and forth to some of the charts here. This is stockcharts.com when I have these white charts that look like this. This is the continuous contract, the futures contract, and you can just kind of eyeball it here again on this chart. This is a daily chart. You can see right up there in the corner, daily. And again, extreme overbought reading. We haven't been this overbought in a while. And it's too early to say this is a new uptrend, but it has the makings of that. In other words, here, let me color this line a little bit different here. We've been in a downtrend. Downtrend's defined as a series of a security making a series of lower lows and lower highs. However, we just eked out a marginal new high. It was almost an equal high, and as I just showed you a second ago on that BAL chart, for all intents and purposes, it was right around that other high there. And again, this is the actual commodity. If you're going to put a bigger weighting on one of the two, you want to put it on the futures contract, not on an ETN, because an ETN that tracks the futures, they have expenses and fees and all kinds of stuff rolling those futures. So let's just for now say it's an equal high. We're kind of stretched out, and this one may need a breather. Let's not talk much more on it. Like I said, I'd prefer to see it buy it back on a pullback or maybe on a breakout above that level. So I'll just have to revisit this one later. All right, next one up, sugar. we have two ETNs, SGG and CANE. SGG, story on that one, forget about all the annotations here, those are old trades. We have a bullish falling wedge right here, very steep bullish falling wedge, positive divergence right there. It was eventually confirmed, so again, ignore those annotations. Big positive divergence, and that was a catalyst for this move. There's an uptrend. That's a beautiful uptrend. So sugar is in an uptrend. Again, you know, these commodities have really run since you know, first being highlighted back earlier in the year. 50% run so far in sugar. Getting a bit stretched up there at about that 43.57-ish resistance, a little bit above it, but you can see here negative divergence right there forming on it. And now, in a strong uptrend, securities can burn through divergence. So at most, I expect a pullback, maybe how far? Let me just put one more line here. Based on that wedge, maybe all the way back down to $39 or so right there. Again, that's not a call for where it's going, but if it gets there and the charts look good, I'd be interested in recycling back into that one. If we can burn through these divergences, great. But again, I wouldn't chase it here. Plus the upside potential, I have about 47 to about 49. Big resistance on this ETF. So the upside that I see in the near term is limited to about 5 to maybe 9%. And that's probably a little bit less than the downside if these divergences play out. So there's another one. At this point in time, I prefer to hold off on, but I'm doing these updates because, again, I've highlighted these, you know, especially quite often, you know, back here a few months back. And then I told you guys recently it kind of cooled down because a lot of these were hitting some of my upper targets and resistance levels. Here's Kane. This is another sugar ETN, just a different company. Same story, the divergences and everything else. Longer term, I think constructive. I think a case can be made. We might have seen a bottom here in a lot of these. In a lot of these commodities, that is, the ag commodities. And when I look at this chart here, this is sugar on a weekly chart, continuous contract in the futures. Last time I pointed out the positive divergence was right here. We had a divergent low there. That was good for a 57% rally from this divergent low right here up to there. That was about about a 56% rally. Then what happened is we put in a marginal new low, but we simply extended the divergences that were already in place, setting the stage for what I believe to be is a much larger rally. Just like we had a pretty big divergent low back here, that led to a 140% rally. So far, this was a bigger divergent low than the previous one. And again, I think over time, sugar goes higher. And to me, it's more so, you know, we get a pullback first and then get that next leg up. But pretty constructive looking chart longer term, I believe. And also pretty big support there around the 10.5 cent level on sugar that pretty much held. Not only held, even better than that. We had a test there, another test, and then a breakdown here, but that proved to be a false breakdown or whipsaw, aka bear trap. When you break support, shorts pile in, then you get a sudden reversal. The shorts realize they're wrong, that they should not have shorted, that the breakdown failed, and they get squeezed out, and that's where you get these sharp moves. All right, so next one up, it's moving on. It would be COW, C-O-W. That's a livestock ETN. It's a combination of cattle and hogs. And you can see here uptrend line that was recently broken with a small divergent high. You had a correction, you're below there. So not in a great technical posture. And again, you know, I'm not giving you a lot of, there'll be some buy now trade ideas in here. I'm just going to want to do a comprehensive update because again, I've highlighted all these in the past. We ran into that, was a resistance level I had on the chart for a while. 34.91 was a reaction there. We've been hitting it, and again, then we finally broke this trend line, and that puts it in a near term, you know, I don't want to say bearish posture, and I don't think that could be a bear flat pennant. It's pretty big. But what I'm also noting here is, you know, this PPO indicator, the PPO signal line, is above the zero line and appears to be turning back up. So we may resume the uptrend. This is still a pretty big intermediate term target. Bottom line is, look, objective entries, pull back to 31.32 or give or take. Let me move that line up a little higher. That line should now be about 31.80. objective long entry with a stop somewhat below. Again, if this 60-minute chart's confirmed, I don't always just buy a pullback to support just for that. I want to see other things. I want to check the futures, check the intraday charts. But right now we're in no man's land. I call no man's land when a security is smack between support and resistance, which it is right now. So your next objective long entries again would be on a pullback to that 3180 level or break out above 3490. However, there's not a lot of room until you hit this primary trend line. Once that goes, if and when that goes, that's pretty darn bullish. Once that gets taken out, I think it'll open the door for a move up at minimum to this 4260-ish level, and quite likely that 4436 level. Okay, that's again a combination ETN that has a couple different futures in there. This one, it's not agricultural. This is UNG. I've been highlighting, I just covered this yesterday, I believe, and I'm going to get to the futures here in a second, but UNG has pulled back to that 1090 level. That's a pretty decent support level. You can see it acted as support here for a while, about 2 weeks of candles there. Broke it with a big impulsive candle, and boom, quick leg down. That shows it was an important level. We rallied, they rallied it back up, got rejected there, boom, another impulsive drop, rallied again, boom, another rejection, finally broke out on a big gap up. So this tells me on a scale 1 to 10, that's up there. That's a pretty big level based on the price action that's occurred there. We rallied, pulled back, boom, tested it, and resistance once broken becomes support, and it was. We're back there again. TA 101, buy pullbacks to support, or short if you break support. So shared my views, and we're going to get to the futures in a second here. Now look, if we break support, I wouldn't be shorting natural gas. Why? Because if we break it and make a marginal new low, it's probably going to be a whipsaw. Natural gas is prone to that. You can see there was a little whipsaw, breakout there. Natural gas is volatile, tends to move. So I'd rather just take a long and set a stop somewhat below than to short it. It doesn't mean it can't go down. It's just my type of trade. Now, why? Let's look at the natural gas futures, NG, and you can see I mentioned the other day, did an update on natural gas. Back here I was bullish. We broke above the downtrend line. I'm sorry, bullish falling wedge, breakout, back test, and we had a nice uptrend. When that uptrend was underway, I highlighted this trend line saying there's a trend line you want to watch. If broken, that would be bearish. And we took out the trend line and my 195 target at the same time. So a double breakdown. I mean, that was a, stop 101 right there. You have not one but two resistance levels taken out. And that triggered the downtrend line that's currently in play. However, we fell to, as I mentioned, I think it was just yesterday, a drop down to that 2898-ish level right there, which is pretty decent support. That alone makes it objective. Plus, you have positive divergence forming right here as well. So I like natural gas here. It is a catch a falling knife trade. So in other words, if you're an aggressive trader or this is your type of trade, take a shot, give it a little room because that's the nature of natural gas. It might want to punch through there briefly. I have a potential trend line. I'm calling it a potential trend line only because we have just two reactions. If we get another reaction on it, then it would be confirmed with a third reaction, and maybe we move down and then break out. And my targets would be that 195 would be the first stop on the way up for swing target, and then the same targets I had before, those higher targets that were not yet hit since we put the bottom in right here. I showed you a second ago that was a UNG daily chart we're looking at. Here's the 60-minute chart if you just want to kind of take a look at that. And you can see I've had this resistance or support level here, 1087 for a while. It was this low right here, the divergent low that was a catalyst for this rally. And again, remember, natural gas moves. It may not look like much here. That rally, I'm measuring it up, was right here, from here to here, was 21%. So let me change this up. That's a 21% rally right there off that divergent low. And so again, if you trade natural gas, if you trade it, I don't have to tell you this, it's super volatile. You don't take as big a position as you do with SPY or Procter & Gamble. Use a smaller position, and that allows you to use wider stops. And also, if you're going to catch a trend in natural gas, it's going to be 20, 30, 40, 50% or more, often 100% on a lot of these runs. So that's it. Objective long entry there. Not much more to say. Stop below. If it stops you out, let it go. If the puts in a bottom or some type of reversal or divergent low after that, we can always jump back in. All right, next one up, palladium. Kind of jumping around here. This is mostly an industrial metal. It's considered a precious metal, but more industrial use. It's going to move with the stock market. Palladium is very correlated because the industrial applications is heavily used in vehicle manufacturing for emissions control. And so, when the economy's good, car sales are good. Here's the pop we had after the election in the stock market, almost mirrors this pop we had in palladium. I don't want to spend a lot of time on it. All I'm going to say is just like the stock market is building negative divergences here. So any new high anytime soon. In fact, we eked out a marginal new high today. That's a divergent high. So I wouldn't chase it long here. Just like the market, there's momentum now. And I did that video earlier today on the market. Look, based on everything I saw, we held that trend line support. PPO is turning up. Momentum is up now. You can be long, most certainly. And there's no reason to be short right now. But, I think the upside's most likely limited based on what I'm seeing on the chart. So palladium we'll take a look at later. We'll keep an eye on it. Longer term, weekly chart, broke this uptrend line, and we're coming up to back test. If there's another reason why I might not want to jump in palladium long right now, but rather keep it on my radar for the next short. USO, crude oil, ETN. I've talked about this for a long time, months, that I really haven't posted a lot of analysis because, what is there to say when a stock or a security is trading sideways? These lines here, I have this gap right here, and that's the orange line. We traded in that gap forever and a day. We broke above the gap, traded, but very, very, very tight trading. Then we entered the gap again. That's been the trading range. All in all, it's been just a one, not even that big, but one sideways trading range all the way going back here to, after the COVID lows, we had a snap back up there, and that's it. And that was a big, big level right here. That was support at that point. We broke it. So really, to open the door for more upside, crude's going to have to go above there. It's just dead money. You can swing trade, actively trade the 15, 60-minute charts. Great. There's going to be opportunities there. Other than that, I don't want to spend any more time on it right now. Same with unleaded gas. I have this ETF in there, UGA, but it's just like crude. It's slogging around sideways right there, and really a directionless trend. So let's not spend any more time on that. Soybeans, SOYB. This is the ETF or ETN, I should say, technically speaking. And another one I've been bullish on for quite a while. We put in a divergent low right here. We broke out above the downtrend line. It's been a heck of a run since these April lows right there. Soybeans have rallied about 27%. Now they're at a pretty significant resistance. We go back for a while here. You can see I've had this level about $16.83. We'll call it $17, give or take. Big level there. Capped all these advances back here, and all in all, bullish price action. Again, the case was made for possibly a lasting bottom. Big divergent low right there, breakout. We've been moving higher. At this point in time, I wouldn't be adding to it. It's getting overbought. There's some potential negative divergences forming. So it would be ideal to see soybeans take a breather, consolidate, and then break out later and look for the next long entry on a breakout above that $17 level. JJG. Actually, before I get to JJG, which is a combination ETF, it includes soybeans. Let me just show you. This is my soybeans weekly chart on soybean futures, and boom, look at that. Nice big downtrend line taken out, divergent low. Last time we had positive divergence, it was during the downtrend, but there was still a heck of a rally here. This time we had the divergent low and we went on to take out the downtrend line. So there's that receipt. For years I've had it here, support resistance zone back here on soybeans, and that's what we're up against right now. So I'm viewing this as longer term bullish. If we can take out, and I expect it will be taken out, the top of this resistance zone, it's going to open the door for a move up there to about what is that, about 1270 or so on soybean futures. That is my next target. That's my next resistance level. There's a reaction high there to contend with, but that's what I favor. What would that be? Let's see. Let me try to measure it for you. If I grab right about here on that line, measure up. It's telling me about a 18% run if and when we get there. Okay, and back to JJG, that tracks the price of corn, soybeans, and wheat. So if you want to include them all, it's a grains ETN. There's a one-size-fits-all for you. Divergence, but only on the RSI. Pretty bullish that it recently took out this level. I had a support zone right here, all the way here. Look at all these reactions. Boom, boom, boom. Reaction high, reactions from above, reactions from above, then below. Gaps right there, multiple gaps, reactions from below, another reaction from below, several more reactions from below, finally a breakout and a back test and another back test and moving up. So this is longer term bullish, and it's a matter of, hey, do they need another breather? Have they gotten ahead of themselves? Again, if I had to do one or the other, either be long or short the grains and lock up my portfolio, sail around the world for a year or two, I'd be long. So it's just a matter of the timing. Right now, hard to make a strong case because we're kind of in no man's land. We're well above that support level. We already hit it once. I don't know if we're going to get another back test, but if we do, that would be an objective long entry for you there. There's a trend line. Let me move that trend line like this. And there's a price channel forming too. So, if we break the trend line, the channel, again, look for support there. Anything much below that is going to be a failed breakout, and that's not going to be good. And this is the wheat ETN WEAT. Just drop the H. You can see the ticker there. And this one we've traded this with impunity here. Look for these. It's just been such a great trading vehicle. Get in and out of. And this is again the benefit of swing trading to investing. If you invested in wheat back here when I point out this divergent low in 2019, well, you would have made a lot of good money, quick money there on that run. These were official trades. We hit it again here, highlight again. It's every pullback to this level. That's the stop on the last official trade, about 490. I mean, you talk about easy wash, rinse, repeat, boom, 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 boom. But what the bigger picture is, we're in this trading range, and wheat or any of these commodities, they don't pay dividends. Nice thing if you're sitting on even a growth stock like Apple still pays a dividend. Not all of them do. You're getting paid, even if it's a dead money trade for a few years. When you're in a commodity, whether it's you can be in gold or wheat, soybeans, oil, you're not getting a dividend. So you don't want to be. You want to be a swing trader until it tells you to be a trend trader, and that's what these are: swing trades: long, short, long, short, long, and now wait for a breakout. This will not continue forever. You're looking at it and say, oh, why don't I short here? You could, but the longer term charts tell me ultimately we're going to break out of here and we're going to see a major bull market in wheat. This has been a basing pattern in what appears to be a longer term, which certainly in a bear market. Most commodities have been in a bear market. So I just flipped over to a weekly chart, and this is the view I'm taking. This is again a trading range. I can't call a bottom in the bull market or in the bear market yet, but I can tell you I think it's there. I can tell you I think so because we've been building these divergences for quite a while, and we've been building energy like a coiled spring here in this trading range as a basing pattern. Pop above it's going to take us up to $7.06. We'll call it $7. Let's just round it off here. From $6 to $7, that's going to be about a 20% run. Then my next target, and again, this is a weekly chart, longer term target's about 850. That's about a 47% run. And then there may be more. Again, if we start a bull market, well, who's to say that we're not going to get up to or above where wheat was trading, back just, 2012, 13, 14, 15. So there's a lot more upside potential in these commodities. And if nothing else, again, there's no guarantee any trades are going to pan out, but it's a way to diversify your portfolio. If you're running all tech stocks right now, great. It's worked out great for you since the COVID lows. But when that trade goes the other way, they tend to fall very fast. And so by diversifying, having other things in there, it helps to cushion the blows. Okay, another grain here is corn. CORN is the ETN symbol. That's easy enough to remember. Nice downtrend line right there. In fact, it started back here. It was mentioned at the time. We had an official trade, put in a divergent low there, popped that downtrend line, ran up here. Next first target was this bigger downtrend line. We hit that, pulled back as expected, nice reaction. Put in a marginal new low, which was a even bigger divergent low right there, and then went on to break above the downtrend line and been moving higher since. So that's a rally off the lows in just since August of about 20% in corn. Not bad. However, you can see we're building some negative divergences now. I suspect we'll go on and hit this second target before we have any big correction. So I think these divergences may continue to build. Do you want to step in here? No, I mean, it's not objective at this point because the upside to my next target's only about 2.5%. And the downside, if we pull back, I'm going to give you one more level here that may be a buying opportunity. It's support. That's about 13.19. If that goes, maybe 12.79. But I think at most, if these divergences play out before my second target here is hit, I think we'll pull back to 13.19, and that may provide an objective entry for the next swing up to 12 T2 at about 14.22, and then you can see some additional upside targets on corn. Okay, Joe, there haven't been many commodities that I've been harping on lately as objective long entries because again, a lot of them are getting up there divergent highs and all that. Here's another one that we've just slayed with in near impunity. With these, just clear patterns, nice, clean, well-defined downtrend lines, divergent lows, pulling back to the same level, about 30.60. Boom, 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 boom. Here was a bear trap, false breakdown, and that's very bullish when that happens because traders see this as support. When a coffee breaks that, the shorts pile in. Then they have that rut row moment where they realize, or rut row, as Scooby-Doo used to say, something's going on here, and they got smoked. And that's why you had such a powerful move up. And this was an official trade. We caught that. We went long down here on the breakout, somewhere here, and it was a sharp move up, blew right past T1, T2 was hit there, and then hit this resistance level, pulled back, and went on to hit that potential third target there at about 40.70. And that's pretty big resistance. We've hit it. That was a previous reaction high. It was this reaction high. There's a gap right there. We've come full circle all the way back down to where, again, I know I'm making a Christmas tree and a lot of colors out of this thing now. Here we are, back to support. Watch, rinse, repeat. Does it guarantee that coffee can't just do this? No. But I mean, come on, this is about as easy as it gets. You take a shot here. If you're swinging up to the top of the range, you can use a much wider stop. Now I'm going to just go back to that 60-minute chart I've been talking on. Active traders want to keep it, you want to keep it a little tight, close to the belt, on your stops. Then, you don't want to give it much more room. As I said, we've been pretty much making equal or slightly lower lows. That's what's given us this wedge type pattern here, which we finally broke out of the other day. That's a breakout there. So that's it. Coffee's on a buy signal. That was the next buy signal to come on a break above this downtrend line. The divergence is still very much intact, and my target. So not much more to say there. This one is a current buy right now. And there's NIB. NIB was also like hitting the easy button. It was last mentioned as an objective long entry right here. Said here is an uptrend line and simple stuff. I mean, doesn't really get any easier than that. No guarantees. In this one, I liked even better at the time because not only did we have a pullback to the uptrend line, but we also had big positive divergence in place at the time. And that led, that was followed by a rally of grab tool. Measuring tool, roughly 33% there. Bigger picture like everything else. I got to scroll back here a little bit, maybe even go to the weekly chart. And weekly's not that clear. You can see it right here. These are two big reaction highs right here, 34.90. They are resistance. They're major reaction highs. You had big rallies up to them, big reversals afterwards. Now you also had that level as a very well-defined support here. When that support broke, this is what helps to validate a trend line. It broke, they back tested it, and then gave up the ghost. So on a scale 1 to 10, this is right up there, 8, 9, or maybe even a 10 for resistance. So ultimately, here's the tough part. We're at support right now. We undershot it briefly, so you could go long here. We could get another touch of the trend line. If we do, great. Same story, objective long entry with a stop below. Although we may not get it. Remember, we hit it, and quite often then you don't hit it again, and you get these rallies. So I'd lean towards this 2750-ish level holding, and getting another rally up here. And ultimately, again, long-term investors, you can go in here, and if you want to add to your position, I would wait for a breakout above that level. If we get up there quick and we're overbought, ideally on a little consolidation first. But again, this is a big level. It's a swing target to the upside right now, and it is also a longer term buy signal if and when taken out with conviction. Okay, DBA. If your head is spinning because I've covered so many commodities and you can't even fathom trying to manage a fraction of those positions at once, then DBA may be your thing. It's the Invesco DB Deutsche Bank Agricultural ETF, and that has, as you can see here, lots of ag commodities in there: cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, feeder cattle, and cotton. You have live cattle and feeder cattle. All right, so that's that. Back here, I highlighted a basing pattern and a buy signal once we broke out of that basing pattern. Also big divergence, positive divergence, and it's rallied from there. Again, remember, it's a very diversified ETN for commodities, so it's going to hold you back. The more diversified you are with just about anything, the benefit is it minimizes your downside risk, because when some things are falling, others are rising. Likewise, it's going to hold you back, and that's why I do these videos. My preference is to select the most bullish commodities at any one time for my commodities portion of my portfolio, and avoid the most bearish, or those that don't look attractive at all, or maybe even go short some of those bearish ones while I'm long others. DBA, okay, a simple approach or a simple view, long-term downtrend line right here. Okay, that's it. So I think we'll continue to work our way up here. PPO is constructive right now, or at least back testing the zero line there. Work our way up, and if and when we take that out, that's going to be a breakout of a long-term bear market downtrend line, and it will increase the odds that the bear market ended here with this big divergent low right here, and that a new bull market is underway, and then we'll be looking for upside targets, that are, again, there's no reason, these are commodities, there's no reason to suspect that they won't go back to where they were. Especially, I think, I've already seen inflation rearing its ugly head. The Fed will tell us otherwise, but I'm sure a lot of you have seen it as well. And housing prices, food, and just about, a lot of items you buy. I always, I've been ordering actively from Amazon for years because I'm working from the home. And I just take note, every time I'm going to reorder, whether it's cat food or something else, steady increases in prices is what I've noticed over the years. And, it's not just Amazon, it's everywhere else. So, yeah, whatever. They tell us there's virtually no inflation, but I think we all know better. And again, that's going to reflect ultimately in things like, agricultural prices and gold and other things like that. GCC, if you want to even be more diversified in commodities than DBA. Remember, DBA is just agricultural commodities. GCC, you throw in the energy as well and precious metals. So it's an all commodities portfolio. Softs, grains, precious metals, energy, livestock, industrial metals, nat gas. You got it all in there. And it's been a little bit stronger because off the March lows, the COVID lows, we had a strong rebound in crude, and then crude started going sideways. So, and it hit pretty major resistance right here to here. And so that's the story on this one. Divergence put in as well. So, mostly a dead money trade now. Not one of my favorites at this point in time. In fact, it looks like it's cracking this uptrend line. That would mesh. I think energy has a pretty good weighting on this. So if crude, takes another leg down anytime soon, that's going to bring this one down. So just be aware of, when you buy an ETF or a mutual fund, you're buying a commodity fund, do a little bit of due diligence. It doesn't take long. A quick Google search, see what the holdings are. You need to know if your commodity fund, some of these are very top heavy. I've seen in mutual funds too, we'll do that sometimes, or ETFs even. Sector ETFs. You might have by XL, XLC, the communication sector ETF, thinking, okay, I'm diversified among a lot of communication stocks, and you don't realize that nearly half of that ETF, XLC, is made up of just two companies, Facebook and Alphabet. So you need to know that going into there, because you're not really as diversified as you think you are. You might have a lot of holdings, but two of the companies in there, these are two share classes of Alphabet, that's all, one company, will make up almost half the returns. and I've seen commodity ETFs and ETNs like that as well. That's it, guys. Wrap it up. That's the commodities. I am going to also have to follow up on a video on the pot stocks. I am kicking myself. Over the years, I've done a heck of a job trading those, catching the some of the big trends, tops and bottoms, and I don't know why. I know why. I'm kind of sidetracked lately. The COVID thing's I'm doing much better. I still have symptoms. I don't talk about it much anymore. I still pause the video to cough and all that. I'll be dealing with those symptoms for a while, but you get a few other things going on. But I dropped the ball on that. I just wanted to mention that because I'll have to do a video because again, I'll know questions will be coming in. Why I didn't take a look at these before the election, because that's usually when they move. We had a big move a couple years back in the Canadian election when they legalized it in Canada. And I know in the U.S. elections, and just skimming the headlines, I think I saw Oregon was it that legalized all drugs. Again, I don't know if that's the catalyst or there's something else out there, but big moves. And here's the thing, I missed a setup. I missed these setups. They all had my type of setups, big divergent lows. Last time ACB had a nice bullish positive divergent low was right here. And what it did from there in just a matter of days, the stock rallied 270% or 260%. Same setup right here. And again, the election obviously played into this, I would imagine. But here we are, a 215% rally. I'll cover them in another video, guys. Again, there's a lot of breakouts, quite a few hitting resistance levels, so I wouldn't chase these today. I'll just leave it at that. But I will do a video because, again, I'm sure if there's not already questions on the site, by the time I catch up on that, there will be soon because of the big move in these stocks. So I'm going to wrap it up here, and we'll do this in a separate video, possibly tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.